Okay, we'll see this part one questions, which is asked for the coming the last examinations, December 2019. It is asked for 5 marks, question number 4A. So prepare a format of changes in working capital diagram. In last period, we already seen that the working capital. What is the meaning of working capital? Working capital is nothing but current assets minus current liabilities, working capital. So this format is given to us, and in that concept, they asked to us the one format of the changes in working capital, which is asked for December 2019 by 5 marks. Question number 4, it is asking for us 5 marks. So in that they just ask the format. So format means just you have to show their particulars column and another previous years and the current year and changes in working capital increase and decrease in that. We have to show the column. So in that first will be assets and liabilities of particulars column A, current assets. So on that I have explained the current assets are those assets which can be converted within a span of time into cash. So in that first will be stock in trade. Stock in trade, you have to take the previous year figures and current year figures and just see that whether it is changes, increase or decrease. Then data you must take that just means on the they will give to us a balance sheet. In that balance sheet you just see the data there, and on data we have to see the previous year figures and current year, and we can show the increase or decrease there. Then bank balance, cash balance and prepaid expenses, these are the current assets which can be seen in the changes in working capital, and we can take the total for that one. Then another part, the concept of working capital, current assets minus current liability. Now we'll see the less current liabilities. Then sundry creditors for the last years and the current year we can just see, and changes shown in the changes in the working column. Then outstanding expenses, bills payable, bank overdraft. So these are the current liabilities. We must take the total for that A and B. A minus B will be the working capital, that is net working capital A minus B. Then we'll find out the changes in working capital. So whether it is changes or increase in working capital or decrease in working capital, we can ascertain by preparation of the working capital format. Then after that, they can ask the one question for you. Explain the advantages of control statement. So this is coming in the analysis of financial statement. In that, fund flow statement and cash flow statement is there. So in that, following are the main advantages of fund flow statement. They ask for 5 marks. So in that, so explain the advantages of fund flow statement, and sometimes they can ask you the question for that. Explain the limitation of fund flow statement. So both questions they can ask in the last previous examination in this column, and in that we'll just discuss the first question, advantages of fund flow statement. So following are the advantages of fund flow statement. We have to explain this. First will be the financial tools. So fund flow statement is increasingly being used as a tool to the management, and with the help of that management they can take the decisions. That is bankers, financial institution, investors and other parties will take the decision whether to continue or discontinue of their business. The second advantages is control devices. Fund flow statement can be used to control the devices to make the financial planning, which will be making planning more effective. For this, they can use it is a devices. Then third advantageous thing is investment. So the potential shareholders can also form an idea about the financial health of the organization from study of its fund flow statement and make the decision for their investment. So that investor can just take the decision whether to invest their money in this organization or concern or the entrepreneur, and they take the decision, means it is useful to the investment. And fifth number is effective test. Fund flow statement is a test of effective use to working capital by management in a particular period of time. The next will be liquid position. With the help of the financial statement, just we can ascertain the liquidity or liquid position of any concern or the business. Then next will be helps to fund statement. With the help of the fund statement, the finance manager can ensure that the business will have funds when required. Then next will be more appropriately and more accurately. It shows the liquid position of the business more accurately for that. And the eighth number point is goes to the advantages credit worthiness. So it indicates what is the overall credit worthiness of the enterprises. Means credit worthiness means sometimes we can purchase goods on credit and so with some credit worthiness. So it can be ascertained the credit worthiness with the help of this fund flow statement and the financial problems. So this is an important and useful tool to the management for which we can throw a light to many financial policies. And the last advantageous thing is terms loan. So with the help of the fund flow statement, all the financial institutions like the banks and the other financial institutions, they may easily sanction the terms loan. So these are the 10 points. Out of these 10 points, friends, you have to write 5 in the examination, which carry 5 marks. Now we'll see, explain the limitation of the next question in that. Explain the limitation of fund flow statements. So based on information. So it is based on the information and contained in the traditional final account. The next will be cannot replace. Fund flow statement cannot replace to the traditional final statement. Means it is a not necessary and not replacing the things here. Then third is not reveal. A fund flow statement is not as much revealing as balance sheet. And fourth is components of cash. So it is agreed that the components of cash is more important than working capital because it is the cash and not the other components, that is stock and receivable, which is required to pay the liability of the concern. So and the last one, no significant is goes to you. The fund flow statement as the liability side depicts the sources which the funds generate and the assets side shown the application of funds and such funds flow statement is not significant. So you know the preparation of this statement we ascertain the sources of funds and application of funds, how that funds have been applied has been given. So no significant has been given. So these are the 5 disadvantages in goes to you. Now we'll explain. They asked us the explain the types of ratio, which is asked the another question in the examinations for marks. So we'll say ratios, types of ratio. So ratio means they are given to you 3 types of ratio, which is useful for us. They are given to you the balance sheet ratio, income statement ratio, and the combination of both ratio. That is combination of both. So for that, they are given to the traditional classification and functional classification and user classification. So in that first we'll see the balance sheet ratio, or it is also called financial ratio. So they deal with the relationship between an items which it can show to the groups of items which is related and together and found in the balance sheet. For example, in that the following ratios always calculated, that is current ratio, liquid ratio, stock working capital ratio. So this is the balance sheet ratio and financial ratio, one classification. Another classification is revenue statement or income statement. The ratio, this ratio deals with the relationship between the items of groups of items which is found. Income statement ratios are gross profit ratio, net profit ratio, operating ratio, and the stock turnover ratio. And lastly, interstatement ratio or combined ratio. In that, these are the ratio which indicates the relationship between the two items or two groups of items which is found in the balance sheet or other income statement or profit and loss account. So in that, so many ratios that can be calculated. First will be return on capital employed, return on capital ratio, that is fund return on proprietors ratio, return on equity capital ratio, and earning per ratio, and debtors turnover ratio. So these are the types of ratio which is asked for us, the 3 types of ratio. So that is first will be the balance sheet ratio, income statement ratio, and combined ratio. So these question they can ask. Then they can ask one problem to you, that is from the following information, they ask to us the economic order quantity. So for that economic order quantity, they are given to your consumptions, and they are given the units for that, and ordering cost, and that is carrying cost. For that economic order quantity, that formula is there. Economic order quantity EOQ is equal to in root 2 AO divided by in root 2 AO divided by C. So in that they are given certain figures is given to you. So they are given 2 in root, we can take here in root 2 into annual consumption is given 675 weeks, and ordering unit is given to you 8, and the carrying cost in that same in carrying cost which is given to you 0.03. Then you will get there economic order quantities. So it will be 24,300 divided by 0.03. Then you will get here total value in root 8,10,000. 8,10,000. Then you will get there 8,10,000 means you will get the 900, because 8 is 881, that's the root of 900 units. So this is the economic orders quantity as per 5 marks. Economic order quantity is given, and 900 units is the answer. Then another thing just we can find out here, write a short notes on account receivable management as per 5 marks in so many examination it is coming. Account receivable. Account receivable is a component of current assets, and it shows the amount receivable from the purchases, trade dates due to the firm from the purchasers who purchase the goods and avail the services of the credit basis, and this is called as the difference name credit basis, and this is called as the different name such as account receivable. So account receivable, and this is called the difference names in that trade debtors, sundry debtors, and trade receivable. So these are the parts that can be taken into consideration the account receivable. So this is also asked for 5 marks. So write short notes on this. Then after completion of this, just we'll see here the another part which is asked in that connection will be that is the account receivable, and the another part. As stated earlier, that account receivable is a permanent investment as in the ever rolling accounts, and the finance manager can be determined the level of this account and suitable so far there will be an easy flow of working capital. The manager should see that the debtors turn fast. If the debtors turnover velocity is high, then it can minimize the borrowing working capital, and all these maintenance of debtors at the optimum level, the degree of credit and sales made, making the debtors turn fast involves the account receivable management, and in establishing the levels of the receivable here, the manager has assessed the following aspects. So in that reordering level, minimum level, maximum level, economic order quantity, all such types of level can be ascertained with the help of these things. Just we'll see here. Now, the aspect that can be establishing the levels of the levels aspect can be given in the 4 ways. In that 4 ways, number 1, how the best account receivable compute the firm's earning, and another will be whether it is feasible to tie the funds in the assets rather than some other assets. And the next is how best the accounts receivable can be reduced without affecting the sales. Whether the accounts receivable contribute any of the achieving objectives of the enterprises that can be taken into accounts. So now these are the things which can be asking the notes on the short notes on the account receivable management, asking for this. Now one more question which is asked, they explain in the last topic, that is explain any one of the inventory control. So asking for 5 marks. So material is a significant portion of the total cost, and therefore material inventory control is a very important of inventory control and can be achieved by using more of the following techniques. So in that technique, number one will be a perpetual inventory control system. The another will be output input ratio, material wastage report ratio, and budgetary control, standard costing, and ABC analysis. So these are the various aspect or techniques that can be used in the material cost control. So they ask to us any one of that explanation is given to you. So for that, they are given to you the perpetual inventory control system is one part will explain. Just we'll see that one. So this is the full proof of the uh, bureaucratic control, and whenever the production department requires the material to send the material requisition note and to the stores, the storekeeper sends them some note to the remarks to the purchase department and sends purchase order to the supplier. The supplier sends along with an invoice. The above system can be shown as follows. So by means of this chart, just we see here they are given to you the system how to make that one. First will be the here in that given to you. Number one will be production department, then another will be the storekeeper, and another will be the purchase order. First will be production department sending a MR note to the MR note with the comments to number and purchase order, then purchase order 4, then they can send to the supplier, and supplier can send that invoice, the inspection department and goods receivable, and the last will be the storekeeper. So this is the perpetual inventory system that can be taken. In that inventory system, stock verification can be done by following methods. In that will be FIFO method, LIFO method, base stock method, reordering level methods, and they are given to you weighted average method. Highest FIFO method, highest in first out, then first in first out, last in first out. So many inventories that can be made there. So after that, they are given to you another cycle of material requisition by following this, and this is the format is given to you. They are the number. First A will be the perpetual inventory system, output input ratio analysis, the material wastage report, budgetary control, standard costing, ABC analysis, always better control analysis, then weight analysis, and just in time inventory control, and FNSCD analysis. So this is the total cycle of material requisition note that can be showing, and this is the type of material cost of inventory control one type. The another they goes to you output and input ratios. So this ratio explains the final output of the finished goods, that is product. By consuming the raw material, it gives the control to the consumption of raw materials. Higher ratio, that is better, is the output of the efficiency and the material consumption. Indirectly, it expresses the material usage during the production process. The ratio may be defined for each of the individual processes of production, and the C number will be the equals to material wastage report. Then periodic report of material wastage is normally sent to the production suppliers. To his superior, wastage may be normal or abnormal. Normal wastage is the narrower results like intrinsic feature of a process, plant, or the material itself normally waste and cannot be minimized. The abnormal waste of account, then incident plant failures, poor quantity and quality of the materials, handling, etc. The abnormal wastages can be avoided with the base care and the control. And the last one more part is yours to you, that is the budgetary control. Standard material consumption per unit is fixed along with the standard price. The periodically these standard figures are compared with the actual figures, and the difference between which is called as a variances, and that variances find out the reason for such variances is also found out by better future, and that will be the variances will be favorable, unfavorable will be there, positive or negative. And the last one, it is given to you the ABC analysis, means always better control. The items of inventory are classified into three classes. So that is A, B, C. Most costlier items grouped under A, and cheapest item grouped under C, and the moderate items called B. The items following table explains. So class ABC gives to you always better control in that. First will be A, B, C, and percentage of the total quantity and percentage of total cost. Say for A, so which is the total quantity 5, but most care must be taken, that is 75% of the cost. B is a moderate 20%, and we can take the care for the cost is 20%, and C is the poor quality C containing the quantity is more but cost is less, that is 5%. So in this ways we have to control the ABC analysis. ABC analysis approaching the managerial technique to determine the degree of control to be exercised over the various item of inventories, and this is done by the analysis of stock inventories or stock usage pattern may be, that is money value of the importance. The ABC analysis is based on the Pareto's law cause the effect, which states that only 20% of the activity causes 80% of the effect. This 20-80 rules is very useful in the business, and it suggests to keep the eye on the 20%, and you will cover 80% of the effect. When this is applied in the inventory control items, so it is known as the ABCD analysis. It means always better control. So that's it for the total fund flows and the inventory control. Then one more part which I am going to deal, that is called the analysis of financial statement. In that analysis of financial statement, just we'll seeing the another part, and to making the completion of that we'll see there. So in that connection, just we'll see here. Now we'll see. Sometimes they are asked the pro forma of fund flow statement, which is asked for 5 marks. So in that fund flow statement, first will be sources of fund is coming in that statement, and another will be application of funds. So what are the source of the fund flow statements? Because it is a combination of funds, application of funds, and sources of fund. In that, sources will be funds from operation will getting by means of preparation of profit and loss adjustment account, then issue of share by issuing shares, then issue of debenture by issuing debenture, sale of investment if any, sale of asset, loans raised means loan borrowing from the financial institution, and non-trading receipts. So these are the total source which can be find out in the case of pro forma of fund flow statement. Then application of funds will be the total generated funds, generated source will comes there. After that, how you have to apply these funds by using this source. So application of funds will be, number one will be loss of funds due to business operation, then reduction of differences, repayment of differences, redemption of debenture, repayment of debenture, purchase of investment, purchase of asset, repayment of loans, payment of income tax, and non-trading payments. So how much source we have got and how we have to apply, it give the correct and appropriate idea by means of this pro forma asking for us for 5 marks. That is fund flow statement is given to you. Then we will see the another part which can be asking in the question form, advantages of inter-firm comparison, asked on December 17. Proper inter-firm comparison presents the following table, and it can be useful. The advantages thing, number one will be corrective measures. So there is no uncertainty in it, as it is taken from a successful firm. As such, it helps the management to take the correct decision for improving the efficiency near to the future. Inter-firm comparison locates the points that out then snags and weaknesses of the firms, and thus assist the management to take all the possible steps in order to improve the productivity of all the factors which are directly connected. helps the business. It also helps the business world to run a correct way. Then next it will be advantages. The comparison, interfirm comparison will be helps to the government. So this comparison helps to the government to regulate the prices of the commodity in the country and helps a central agency. Since the data is collected and presented by the central agency or the body, then it is that is awareness is absent in this connection and helps the central agency to collect the available data. Develops the cost, interfirm comparison develops the cost of the consciousness amongst the members, and since it is various ratios can be known here. Then last one is advantages is profitability aspect. Interfirm comparison aspect, not only the difference between the two firms, and it also explained the reasons such as such difference between the two firms and suggests the possible remedies to improvement of both liquidity and profitability aspect of the firms. And this is the point which is given 7 point by making the comparison and the advantages of the interfirm comparison. Then they can ask the another question which is asked for the limitation of interfirm comparison for 5 marks. Now we'll see the difficulty to maintain secrecy. It is very difficult to maintain the secrecy of the firm since the data are presented to its member. Not possible to make comparison. It is not always possible to make the proper comparison between the firms, as identical position is hardly possible in the real world. Thus, it is not always effective. Absence proper accounting. In the absence of any proper accounting system, the data is collected and presented cannot be produced away. Reliable information for the proper comparison is not done there. And last fourth one is given, disclose data. Sometimes the members firms do not proper to disclose their data about financial and the operational performance, and hence cannot get the correct information. And last, secrecy. So secrecy cannot be maintained in the ratios are used instead of absolute figures, and so these are the disadvantages things that can be taken into the things here in this case. Then after that, one more parts that can be asked in the examination which is coming. Explain the uses of fund flow statement. How you have to use and what is the usefulness in the fund flow statement. The uses or benefits or significance, and one and the same answer we have to write here. First point, disclose the changes. The financial resources of the company are analyzed in detail and disclose the changes made between the two balance sheet date. More profit. So it gives the answer to the question. So there is an inadequate liquid cash position in spite of the business making more and more profitable. Then extend funds. It shows to extend the funds where receivables and the way of the uses for the significant period. More dividend. It shows the possible of paying more dividend than the current earnings. Sources of fund, the cost of material and the capital business can be computed on the basis of source of fund flow statement. The issues to earn, it shows the issues to earn the maximum amount of profit for the current year and guide for getting funds. These sources of previous year funds statement may be act as the guide for getting the funds in the future requirements. Creditworthiness, overall creditworthiness of the company can be found out by seeing the funds. So for the that is the fund flow statement. Then suggestion, it suggests the way to improve the working capital position of the company, and the financial policy is the last point. It helps the management to frame the changes the financial policy of the company. So these are the uses, benefits are the significant. Now in sometimes they can ask the question, explain the limitation of management accounting, limitations. So this is coming for the question number 1 itself. For 5 marks there given to you. December 17, this question asked. So limitations, disadvantages, drawbacks of the management accounting. based on financial and cost records. So, in this accuracy, the validity of management accountants is largely based on the accuracy of the financial cost. Means if they accurately done the profit accurately in financial and the profit records as per the cost account, these records determine the strength and the weaknesses of the management accounting, lack of knowledge and understanding and related subject. Financial accounting, cost accounting, statistics, economics, psychological and sociological are the related subject to the management accounting. So personal bias. So analysis and interpretation of financial statement are fully depending upon the capacity of the analysis and interpretation. The import number provides only data. Management accounting can only provide data and not prescribe any course of action. Then preference to institute the preference to the uh, institutive decision making. Significant decision can be taken with the help of using the management accounting technique, and management accounting is only the tool and it is not a remedy. So here the management accounting is using to the management accounting system as a tool to give the advice and give the facilitate to the management for decision making. But actual decision and their implementation can follow up action or the progress of the management. Only they just use as a tool, but not as a remedy. There means it cannot be removed. So these are the limitations which is asked for us. And one more part they can ask to you in that will be debt equity ratio, which is asked for short notes. Debt equity ratio is calculated by dividing company's total liability to its shareholders. These ratios are available on the balance of the company's financial position. The ratio is used to evaluate the comparison of the financial leverage. The debt equity ratio is also referred to as a risk or gearing ratio, and the formula for calculating debt equity ratio or debt equity ratio is equal to total liabilities divided by total shareholders equity. The current ratio is calculated by using the following formula. Current ratio is equals to you current upon current liability, and current assets can be taken, that is cash in hand, cash at bank, then sundry debtors, then inventories. So these are the current assets. That current ratio is the liquidity ratio, and it measures the company's ability to pay the short term and the long term obligations. To calculate the ratio, the analyst compare the assets to current liabilities. Current assets include cash, cash balance, sundry debtors, bills receivable, inventory, work in progress, prepaid expenses. Are they expected to be turned to the cash within a span of time? And current liability includes the accounts bills payable, then sundry creditors, outstanding expenses. So these are the current liabilities. The standard ratio is always 2:1, and the ratio indicates the solvency of the business and the ability to meet the liability of the business as and when they paid due. The current assets and the sources from the liabilities have to be met and also measure the value of the margin profit. So these are the current ratios asking for current assets upon current liability, and always it is standard 2:1 is the ratio. Then explain the uses of the fund flow statement is the last part in it, just we'll see here. So based on the cash base, since cash flow statement can be prepared in the order to know the future cash position of a concern. Future position is the second point. A projected cash flow statement can be prepared in future cash position of the concern so as to enable the firm to plan and coordinate its financial operation properly. Comparison. A comparison of historical and the projected cash flow can be made to find out the performance to take immediate and effective actions. And fourth is inter-firm and intra-firm comparison. A series of inter-firm comparison cash flow statement reveals the firms and liquidity improving or not. helps in planning. So cash flow statement is always helps in planning and repayment of the loans, replacement of fixed asset and other similar long-term planning cash. They explain the causes of cash position. Now, in the light of this, now you see it is a better to explain the causes of poor cash position and the substantial profit of the firm by throwing the light of various application of cash made by them. So these are the various parts which can be explaining the cash flow statement, the advantages, then uses, and the fund flow statement, the format. So these are the various parts that can be taken place. Just we'll see one more thing which is remain in the financial statement, that is what is ratio. What is ratio? The relationship between accounting figures and it also known as financial ratio. It can be expressed in fraction, proportion and in percentage. Always can be calculated. So therefore there are so many ratios are there and it can be classified three parts. We have seen earlier, that is balance sheet ratio, income statement ratio and the combination combined ratio. So for that we can ask the question to you, the objective of the ratio analysis. The first and foremost objective of this will be helpful for the comparative analysis and profitability. The ratio is helpful for the comparative analysis and profitability, liquidity and solvency of the business. Then study of change. It helps to study changes taking place in the business. And third will be improve the performance. So it helps to improve the performance of the business with the help of these tools and for forecasting of any things for the business, it ratios is required. Because there are some standard norms given, that current ratio 2:1, liquid ratio 1:1, by following and the liquidity and profitability it requires. Then next is operational efficiency. It helps the study to the operational efficiency of the business and the effective utilizations. It facilitates the effective utilization of the resources. And last one will be intra-firm and inter-firm comparison. Ratio is also useful for intra-firm and as well as inter-firm comparison. They can go on making the comparison of the other things. So internally, externally, they can go on making and how the ratios are increased or decreased, whether it is as per the norms with standards or not. So they can give these things here. Then explain the advantages of ratio analysis. First we'll object to see, explain the advantages now. So first will be ratio analysis is guide to the management. It guides the management in formulating the future financial planning and the policies. Means for making planning as well as the policy. So it guides to the management. Efficiency of the business. It throws the light in the efficiency of the business organization. Then another will be effective control. It ensures the effective cost control. Measure profitability. It measures the profitability and solvency of the each and every concerns or entrepreneur. Then investment decision. It helps to make the investment decision and it gives the guides to the investor whether to invest their money or not. Then managerial efficiency is the last point. It permits the monetary figures of many digits to be condensed to or 3 digits, which enhances the manager efficiency. So these are the points which is explaining advantages of ratio analysis. Then explain the limitation of ratio analysis, disadvantages, drawbacks for that ratio analysis. So in that we'll see. First will be not the scientific analysis. So ratio analysis is lacks of ascertaining the standard level of the ratios. Therefore, scientific analysis is not possible with the help of the ratio analysis, and this is one of the drawbacks remains there in ratio analysis. Another, no standard. As there is no standard with which to compare, it fails to throw the light on the efficiency of any activity of the business. Then magnitude are not known. It gives only the relationship between the different variables and the actual magnitude are not known through the ratio. Fails to indicate and mistaken errors. So it fails to indicates and immediately where there is a mistake or errors lies and it cannot be ascertained easily there. Not consider market changes. It does not take into considerable the market and the other changes that can be happens and taken place in the market. So no consideration no consider market changes there. Then reflects drawbacks. Ratio are derived from the financial statement and naturally reflect their drawbacks. So these are the 16-point explanation of the limitation of the ratio analysis. Now we see the things another will be. So in that next part which is remain here will be last period we have already seen that distinction between management accounting and the cost accounting and cost accounting management. Now we will see one more difference here in this case, difference between cash flow statement and fund flow statement. So number one will be in that fund flow statement and cash flow. Number one meaning the term funds repair that is refers to the working capital and it shows the changes in the position of working capital. With help of fund flow we can ascertain and changes the working capital, whereas the term cash refers to the cash only and it shows the changes in cash position of the business. Useful. The analysis is more useful to the long-term planning, whereas this is the more useful in the short-term planning because cash flow for day-to-day mitigation of these things we can prepare the statement that can show the cash by means of operating, investing and financing activities. So it can be used for a short term, indicates. So this indicates inflows of funds and outflows of funds, whereas this indicate inflows of cash and inflows of cash and outflows of cash can be shown. Includes fund flow statement is a vast concept which includes flow of cash also, whereas as compared to the fund flow in cash flow statement it can narrower term and it can include only cash only there. Then effectiveness. This is the test of effective of use of working capital to the management in a particular period of time and this tests the effective flow of cash in the management in a particular period of time. Changes. This consider change in all the current assets and current liabilities, whereas it indicates simply cash receipts, cash payment and does not take into consideration other current assets here. The improvement in the working capital does not mean in the improvement in cash, whereas cash is one of the constituent of working capital and as it is improved in cash position, these are the changes in budgeting things. So use for capital, it is useful for capital budgeting and for fund flow statement is used for cash budgeting. So many times this question they can ask distinguish between or difference between cash flow and fund flow statements. So this is regarding all the analysis financial statement. So this is the things that just we see here in this connection.
अजून काय होतं सिलेबस झालं सगळं
सगळं म्हणजे आता ह्यातला एक राहिलेला आहे तो घेतो मग
हा तो पण घेऊन टाका 8 ते 20
म्हणजे
15 मिनिटं
हा कंप्लीट
हो
करतो.
कंप्लीट करू.
The next will be there. We'll see financial statement now. What is financial statement? Explain the feature. Now we'll see critical evaluation of financial statement to measure the profitability is called the analysis of financial statement. So this is ask the question. Explain the financial statement and explain its features, or what do you mean by financial statement and explain its feature. First we'll see the meaning and the definition and the features. Meaning will be critical evaluation of the financial statement to measure the profitability is called the analysis. The financial statement is the meaning. Definition they are given to you according to the American Institute of Certified Public Accountant AICPA. Financial statements are prepared for the purpose of presenting and periodical review of report or progress made by the management and deals with the status of the investment in the business and the result achieved during the period under the review. Then features will see, the features are four in number. First will be the financial position. Financial statement shows the financial position of business enterprises. The second, progress report, it helps to preparing and periodical progress report of each and every organization. Third will be given information. It provides the information, important information to the shareholders, bankers, creditors, and the other person which is who are making the investor also. Then fourth, summary of statement. It also provides the summary of accounts of business concerned through income statement and balance sheet. Then explain the objectives of financial statement. So in that objectives, first this is a very important question asking for so many times. So we'll see, explain the objective of financial statement from the point of view of the business concern. So objectives of financial statement viewpoint of the business concern. How it is useful for the business. Number one, measure, that is diagnostic measuring the profitability. Nowadays, business concern not only desire to earn the satisfactory result or on the funds invested, rather they are interested to evaluating the concerned profit earning capacity. Profit earning capacity indicates, so number one will be increasing and decreasing the trends of profit earned, its capacity to pay interest and dividend, ascertain the future profitability. Then next will be to be assessed overall the financial strength, means as per the assessment of the financial strength, the financial statement, the financial and the ability, stability, liquidity of the concern. This helps to the number one will be helps concern to the sufficient funds to carry on its activities of long term. There is any requirements to borrow and additional funds meet to the financial needs. The current resources are enough to pay the current liabilities. And thirdly, C part, to know the trends of the business. Means this is objectives regarding, first will be measuring profitability to assess overall financing strength, and C part they are given to us will be, that is to know the strength of the business or the trends of the business. The profitability of the concern depends highly on the efficiency of the management, and in that first will be to know the trends of the business. With the help of analysis, financial statement helps to judge whether the financial policy adopted by the management are proper or not. Then from the viewpoint of the creditors who have supplied goods on the credit worthiness or credit basis, they also got the ideas regarding the financial statement, and financial statement helps to creditors to know the concerns ability to pay their loans and interest or not. Then from the viewpoint of the investor, the investors are interested to know the profitability and solvency position of the concern. From the viewpoint of the employee, though the analysis of the financial statement, the employee can judge whether the concern is paying true and fair salaries or not. They can ascertain for this. From the viewpoint of the government, such statement can also help to the government to take the various decisions, such as whether the concern carries its trading activities under the purview of the Monopolies and Restrictive Trade Practices, that is MRTP Act, or not, and to control the policies of the price goods or services they are given to us. Then whether the business concern or the company is working within the preview of the Companies Act or relevant act or not. So by finding out this, these are the main objectives that can be ascertaining in the financial statement. Now we can asking, and another question they can ask in the examination will be, explain the limitation and analysis of financial statement. Limitation they asked us. They are given listed 5 numbers and required in the examination. So 5, provide the historical information. Financial statement provide historical information as they are prepared on the basis of the historical cost and book value of the assets. Then incomplete information. Financial statement are purely the study of that is interim report. The report prepared are totally based on the basis of the historical cost and not and the book value of the asset, but report prepared are totally based on accounting principle, concept and convention, due to which the financial information is disclosed may not be realistic. Then qualitative information is ignored here. Only the monetary aspect which is measurable and considered in the financial statement, non-monetary aspect like efficiency of the management, then competition, prestige, etc. are ignored. Such non-monetary aspects are equally important for the concern, which is not taken into consideration. Then fourth, it is the only the tool but not a remedy. Financial statement analysis is a tool to measure the solvency, profitability, financial strength, management efficiency, etc. concern. However, fails to pay the provide the solution for all the concern drawbacks. And lastly, it is given to you the influence of personal judgment. The financial statement and its conclusion are derived by the personal decision of the accountant, and such as selection of method of depreciation, inventory valuation, writing and deferred expenses, etc. Hence, reliability depends upon the experience, ability, and honesty of the accountant. So these are the things that can be taken. Now, what are the tools of the financial statement or financial analysis? The following tools that can be taken place into the analysis. In that will be common size statement, then common size balance sheet, common size income statement, comparative balance sheet, comparative income statement, trade analysis, fund flow analysis, cash flow analysis, and trade analysis. Are these are the useful tools which is helps to the management to take the decision. Out of that, what is comparative statement? Just we'll see in that. You can ask this question also on examination in the examination. The financial statement which contain the figures of two or more consecutive accounting period give the comparative view in the financial information and the position of the business enterprises are called the comparative financial statement. In this statement, the figures for two or more successive years are placed side by side to facilitate a comparison according to the horizontal or comparative always means a process of calculating the absolute figure in the percentage form and change the form comparatively statement for the purpose of following are two statements that is required. Comparative balance sheet is the one statement, another comparative income statement. What is comparative balance sheet first? So comparative balance sheet contains the figures of liabilities and assets for the current year to the previous year and to facilitate each comparison. Such comparative statement indicates the trend of the changes in the financial performance and position of the enterprises. Then comparative income statement. A comparative income statement, that is profit and loss account, contains the figures of expense and the income current years and the previous year can be easily compared. Comparative financial statement can be prepared by finding out the absolute change and the absolute that is percentage, and that can be explained in below. Absolute change. Absolute change is change calculated by subtracting the numerical data base year for the numerical data for the current year. The result such comparison may be positive or negative or natural, that is neutral, or sometimes it is negative. Then difference is denoted by the curve, bracket or symbol in minus. Means if there is a negative, then you can write in bracket or minus sign you can put there. The relative change. Relative changes is expression absolute change of base year in the form of the percentage and is calculated under and by using the formula. Absolute change divided by amount of base year multiplied 100. The result is also obtained. Percentage may be either positive, negative, or neutral. So like that, this is the comparison. Then advantages of or benefits of comparative financial statement. Now we'll see. First will be it is more elastic in its approach. Comparative financial statement is more elastic in the cost approach. Then second, liquidity status. It facilitates in ascertaining the liquidity status of the concerned comparison. The comparative statement shows the various figures, firms, or the numbers of various years side by side of both inter-firm and comparison and the intra-firm comparison can be made. Then horizontal analysis. The variables are arranged in horizontal for the purpose of analysis of inter-firm, interpretation of data and taken from the financial statement for assessing the property, overall efficiency and the financial position of the person. Trend analysis. The comparative financial statement helps to ascertain trend relating to the sale cost of goods sold, operating expenses, so on and so forth, and so the proper comparison can be easily made. Evaluation. And the last point here, evaluation. The comparative financial statement helps to analyze, to compare the performance of the firm to another firm. This comparison helps to find out the weaknesses and strength of the firms and take the absolute steps. Measuring the financial position. Comparative financial statement helps to measure the important distress financial ratio which are used for predicting and financial distress. Then disadvantages of comparative financial statement we'll see now. So in that, explain the disadvantages. First will be inter-firm comparison. Inter-firm comparison will be effective if both the firms follows the same accounting principle, method or valuation of stock, asset, etc. Inflationary effect. So comparative financial statement do not recognize the change in the price level, and as such it will be no use. Ascertaining correct trend. It is very difficult to ascertain the correct trends in the financial structure which are frequently frequently happen. Supply misleading information. Sometimes the comparative statement provides the meaningless information. For example, if the negative amount comes in the base year and the positive amount in the next year, it is not possible to find out the change percentage. Then uniformity principle. There must be consistency while accounting principle, concept, convention, but practice of this is not done, and such a multiple year analysis become that is useless. So these are the drawbacks. Then what is common size statement is the another tools. So common size statement. In common size statement, financial statement of the same period are compared with the figures of each of the item converted into percentage of some common base. So here the income statement and the balance sheet of the two consecutive years of the same concern. The income statement and the balance sheet of two similar concerns are prepared to draw the meaningful conclusions. Step to prepare the common size statement. List out the absolute figures of items of the balance sheet and profit and loss account and two successive years of two firms. Choose the common base as 100% and work out the percentage compared to the base rate to all the individual items, and specimen of common size statement will be like this. First we have to take the particular year percentage, year 2 percentage, and we can go on making these things. So these are the base we can follow in. Now what are the benefits for the common size statement, they ask to us, and the limitation. So these are the two possible questions they can asking to us. So that we'll see here in this case. So benefit of the common size. Useful for comparing profitability. Common size statement are very useful for comparing profitability. It gives the different trends in different items and balance sheet and income statement. Inter-firm comparison. It also useful for the inter-firm comparison of income and the position of the statement or two similar units of the organization of the same period. Then easy to understand, common size statement is very easy to understand because it gives the idea for the each of individual items of the total assets of the firm as well as the liabilities. Then helpful time series analysis. Common size statement can be helps to analyze to find out the trend relating to percentage share of each assets and the total assets. Comparison at glance analysis can be prepared and financial performance at a glance since in percentage increase or decrease individual components of cost assets and liabilities etc can be taken place here. Then helpful in analyzing structural composition. Common size statement helps the analysis to ascertain the structural relations of various components of cost, expense, assets, liability, etc. So these are the 6 points which is help to us the benefits or advantages of common size. Now last point in that connection will be in the analysis financial will be limitation of common size, drawbacks, demerits. The common size statement do not from snacks. Snacks means there are some disadvantages. Number one, standard ratio. Common size statement does not help to take the decision since there is no standard ratio. So this is one drawbacks. Then change in price level. Common size statement does not recognize and does not calculate and recognize the change in the price level that is inflationary effect. Then following consistency, if consistency of accounting principle, concept, convention is not maintained, then common size statement becomes less or it is not worthful, not useful. The next, seasonal fluctuations. Common size statement fails to convey the proper records during the seasonal fluctuation of these sales, assets and liabilities, etc. And EPAR, window dressing. Effect of window dressing in financial statement cannot be ignored and common size statement fails to supply the real positions, the sales, assets and liabilities. Then qualitative elements, common element that is common size statement fails to recognize the qualitative elements, for example, quality of the works and cost, and then customer selection, etc. And the last one, which is listed in this, will be liquidity and solvency position. Liquidity and solvency position cannot be measured by common size statement, and it is considered percentage of increase or decrease in the various components of assets, liabilities, and it gives the idea. So these are some limitations that can be explained, and that's it for the all financial statement of financial analysis. We'll wait here. Neta उद्या विचारलं मिळाली. नंतर कसं आता कोणत्या रस्त्यात वगैरे
हो